long term, and this book is written for the very long term, I trade very tactically. And again, if you watch me on TV, I mean, sometimes, I try to not day trade, but it may just be a few days that I hold positions, particularly losers. I tend to be out of losers very quickly. In winners, I tend to hold weeks, though. I mean, my time frame is not years in general on the show. The book was written for a much longer time frame. I'm saying that I'm so bullish on America, and this is important, long term, and I'm bullish on America relative value. In other words, that I think we will go down less than the rest of the world. I think the emerging market bubble, and the China bubble in particular, is so dangerous and is so big that I believe that markets in general, risk asset prices, equities primarily, I think commodities as well, but I'm mostly focused on equities, that equities are going to trade far lower, demonstrably lower from here. I do think that will set up for an eventual buy of a lifetime for those who belong in equities. Another whole chapter in my book, though, is telling you that most folks don't belong in equities, but that's a different story. We could be here all night. Hopefully you'll read it. But if you are likely or willing to invest in equities, I think there will be an opportunity to get incredibly long. Right now, present day, I'm very long treasuries, which I've been buying basically since that Osama bin Laden low in the dollar. What we have seen is that dollar inflow mostly has found its way into United States treasuries. We have seen a very strong rally to start the year in the S&P 500, to be sure. But for instance, this year, basically what we've seen in 2012 so far is the exact inverse of everything we saw in 2011. So the worst performers of 11 have been the best of 12. So for instance, emerging markets, which dramatically underperformed the United States, particularly China, in 2011, so far in this new year, they are actually outperforming dramatically. I believe that is a short bounce. I think it is ephemeral. I think it is a bounce to sell into, and that is what I am doing. I'm long treasuries. One of the main reasons I'm long treasuries is China. And by the way, I'm often asked about, well, doesn't China kind of have us by the neck, by the short hairs, the fact that they own so much of our debt? And I respond quite the opposite. And this is just one of the realities, one of the paradoxes of large-scale indebtedness. By that I mean, if I owe you $100, that's my problem. If I owe you $10 million, that is your problem. And that is the problem that China has. They have loaned us such a gargantuan amount of money that it is not the creditor who is calling the shots, it is the debtor. And in the case of China, by the way, I would say it's even worse than that. Because they are so beholden to us for exports, because that is where their growth emanates, it's akin to if you were an auto supply company, let's say, in Michigan, taking all your profits you earn from your business and only buying the bonds of General Motors and Ford. That's essentially what China has done. So I think it's an incredibly dumb play. Now, I will also say they might not have had much of a choice because their cash flow is so massive that there aren't a lot of markets that have the scale to absorb other than U.S. treasuries. But anyway, I am bullish on treasuries. If I'm right about the emerging market world, I think deflationary forces are still at work. In general, I'm not a huge fan of Ben Bernanke, but I think he is dead on about this, and he's criticized constantly on my network and by Wall Street for talking about slack in the economy. I think he sees correctly what I see, which is that there is very little pricing power out there. There is in some very narrow circumstances. Certainly food and energy, there's been a ton of pricing power, and it's killing the middle class. To me, it's American central planning at its worst. But there is not pricing power in general in the economy. And part of that is because of China, because exports are slowing. I think they are going to start discounting more and more and more. I think we're going to eventually see a 10-year yield that gets close to 1%. We're already at 1.9. Just a couple weeks ago, we were above 2. That value was quickly rejected. I see a much, much higher price, lower yield ahead for treasuries. Yeah, no, great question. And everybody couldn't hear, how do you express a short China trade? And I've done it a lot of different ways. And I mean, I don't want to answer with just one because it changes so often. But to me, one of the purest way, what I did almost all of last year very successfully is FXI is the most liquid Chinese ETF. Now, it's not really the Shanghai index, it's the Hong Kong index, but it's as close as you can get with liquidity. What I would do is short FXI and buy an equal dollar amount of the S&P, of SPY. So I mostly play the relative value spread, literally play that. So saying that no matter which direction, the U.S. will rally more on the upside, the U.S. will go down less on the downside. So that is the primary way in which I play it. But there are a lot of ways. Commodities, I am actually short copper right now. Copper in February even though stocks have done incredibly well so far. This is getting very near term now, but stocks have done very well in the new year, but they've done particularly well in February. Copper is actually unchanged for the month of February, slightly down, I think, as of the close. I was in a car coming here, so I didn't see the close, but I think the copper is actually slightly lower. That to me is very significant. When copper is not tracking stocks as a risk asset, generally it does. It generally trades with stocks. That to me is China specific, and so I'm a big opponent of copper. I would also say Australia. Now the Aussie dollar has flown lately, so I haven't touched it because I've been respecting the momentum. But Australia is a country that is almost completely, it's really a barnacle on the whale of China. Australia is a country that lately does little but act as China. If China's acting as America's factory, as the West's factory, which I believe it is, and little else, well then China is acting as the quarry to that factory. And Australia, because of that, has thrived in recent years. But I think that there's a lot of bubble characteristics to Australia as well. So one way I have fought it last year, and I hope to again soon, is by shorting the Australian dollar. But in general, too, for investors who are not active, I don't suggest trying to necessarily short China, but I would avoid too much China exposure. And by that, I mean the simplest way to do that, without having to dig into it a ton, is honestly just avoid the biggest cap American stocks, because they are heavily exposed to China. So I'm talking about companies like Caterpillar, like Yum Brands. Those to me are the names that should be avoided. And I would focus much more on boring names. I love dividends and domesticity. Those are my two Ds. The kinds of names that meet those two criteria are non-glamorous names, utilities. I happen to love Southern Company and own that. I did very well on it last year. So far this year, not doing well. Again, the 2011 trends have flipped so far in 2012. I love Altria, MO. I think I mentioned Philip Morris before. I meant to say Altria, because Philip Morris is the international. So I like those kind of boring dividend names. In a world of a 1.9% 10-year note, if you can reasonably safely get anywhere near a 5% dividend yield, and I know that's not glamorous, it's not sexy, but I think it's effective and safe, and they're domestic plays, I think that's where you should be deploying your capital, not into the Caterpillars and Deeres and Yums. Yeah, I don't know is the honest answer. I don't know enough about those companies. And just in general, too, I tend to be, and if you watch the show, you might notice this, I'm much better on sectors and macros than I am on specific companies. I certainly suspect it smells like a bubble to me. The one that I know the most about is Groupon. I don't know that much about Facebook, honestly. I've never used it. And I do think Facebook in some ways is unique from the rest of the group. What concerns me is that all social media in the recent last couple of weeks seems to have gotten a lift from the Facebook sort of halo effect. And I think that is unjustified for at least some of those names. The one that I think it's unjustified on that I have been short, I'm not right now, is Groupon. I'm quite certain that Groupon closed below $20 today, which was its IPO price. To me, Groupon is not really a technology or social media company as well as I understand it. It's an incredible sales force, and I don't doubt that they have some very entrenched, terrific sales people and sales relationships, but I don't think that there's any significant barrier to entry for Groupon. And I suspect that names like Google or like Facebook are going to supplant Groupon, even though it's had a terrific valuation so far in the market. But yeah, I mean, it's a hot thing that we talk about it a lot on the show. You might notice I try to be quiet in that segment. I'm not typically quiet, but I try to be quiet on social media. It's just not my forte. I don't know enough about the military to know if this strategy is going to be effective. I'm not a military guy, I'm not a strategist, so is that the right strategy or not? My hunch is it is, and even with lower expenditures, we will still be far and away the dominant force. I will note, too, that even with the cuts that are proposed to our military budget, we still spend almost as much as the rest of the world combined on our military. And it's not just the money we spend, too, though. It's also the quality aspects. We have a multi-generational tradition, which is incredibly important, right, of operating an incredibly lethal military. And one of the benefits, I mean, war is obviously terrible and lamentable, but one of the benefits of the fact that we've basically been at war for 10 years is we have a military that is incredibly precise and practiced at what it does. So I think even with budget cuts, it will still remain far and away the most lethal force. Now, as far as China's military, China's making a lot of noise about their military. And of course, they have a massive military in terms of numbers of people. That, by the way, is an employment policy. It is not really a military policy, and it gets right at what I was talking about with demographics. It's one way to try to placate the masses of young men who are now having a harder time finding a job and an even harder time finding a girl because of the gender imbalances in China. So I think the Chinese have smartly decided, let's give them minimal pay and have them serve in this massive military that is very long on people, but very short on real lethality and weapons. One example of that, there was much fanfare last year that the Chinese have finally launched an aircraft carrier. But really, and at first like, oh gosh, China has an aircraft carrier. All right, that's significant. But then you think about it, there are literally people who are alive today who are 100 years old in America who flew on an aircraft carrier. We have had aircraft carriers since the 1930s. This is not new technology. It's not frightening. And even more important than that, can they really operate it? At least in a sophisticated way. Can they protect it? Can they really move it and use it the way that the United States can? I say, absolutely not. So to me, and I disagree honestly with a lot of conservatives who really try to make China into a scary military opponent. I have no doubt that China would like to harass its neighbors, but in terms of being a threat to the United States, I do not see that. And by the way, too, that's one of the benefits of commerce. The mere fact that we owe them so much money via our treasury market, that alone, I think, will keep the United States and China at peace for a heck of a long time. So thank you all for listening. If anybody would like to buy a book, I'll be up front. I would love to sign them, and I thank you so much. Please follow me on Twitter. I'm at Cortes Steve, Cortes with an S, and I appreciate your time, and I love visiting Notre Dame. Thank you.